You can build your own Venmo in pretty much an hour with Dynamic, right? Like that is the power.
Assuming the cost of the tech comes down to zero, what are the barriers to?
I think there are four main things that I think are actually non-trivial to build. That is where you're seeing a lot of this M&A activities is really consolidation of a single offering, where you show up to a Fortune 50 company. They don't want to start connecting multiple vendors, right? They don't want like blocks.
Mastercard acquired BVNK for 1.8 billion. There's been a string of M&A for the last 12 plus months in the space.
There's no winner take all in that market, right? The reason the M&A market is chaotic and everyone's approaching it from a different level and is because there is no formula for winning this market.
What does that mean for just the way the industry is shaping?
Views are personal, not investment advice.
This is Money Code. It's a show where we decode stablecoins and agentic finance. I'm Chuk, Okpalugo.
And I'm Raj Parekh. And today we're joined by my good friend Itai Turbahn, founder and CEO of Dynamic. Itai, maybe you can just kick off with what is Dynamic?
Yeah, absolutely. So first, thanks for having me. I'm a little bit jealous. I couldn't say, and I'm Itai Turbahn, just like the two of you, but I appreciate you having me on. For those that don't know, what Dynamic is really we're an embedded wallet company. So think about us, and pardon me by the way, as I have a little bit of a cold, so apologies in advance to everyone listening. But what Dynamic is an embedded wallet company. So think about us as an SDK, similar to how you would set up Twilio if you want to do SMS kind of notifications globally, or you set up Plaid to connect to banks globally. You would set up Dynamic in your application, and you are able to generate crypto wallets, embedded wallets in the background, so that you can receive, send funds, earn yield, and do everything you want to do with crypto. So think about us as kind of a connector between your app and kind of the world of money movement without needing to know any of the complexity around it. So we take care of the security around it, we take care of the complexity, etc. So if you're, for instance, building a remittance app globally, or a payroll app, or a neobank, and you want to touch these crypto rails, the way to do that is wallets. That is what we provide to you, a developer, essentially. And to your other question, Dynamic used to be an independent company. We were backed by A16Z and Founders Fund. Today, we are proud members of the Fireblocks family. We were acquired late last year. And so within Fireblocks, we take care specifically of consumer embedded wallets, or non-custodial embedded wallets usually, which are the embedded wallets you set up in apps that are used by millions of users on phones or in websites, etc.
Right, and embedded wallets is like that layer is like the key layer that is really unlocking stablecoins and blockchain for a lot of consumer applications, business applications in general. I think you guys were the ones who kind of figured out, hey, why don't we just make it easy for people to get a crypto wallet with the way that they normally log in, right? With their email address and so on. That's the embedded wallet players. And a lot of the embedded wallet players, including, Portal, where Raj was the co-founder and CEO of, have been acquired. And it's, partly because it is the interface of the application layer and the blockchain. And so, recently, Mastercard acquired BVNK for 1.8 billion. There's been a string of M&A for the last 12 plus months in the space. A lot of industry consolidation. Some of it is kind of entering the market. A lot to unpack, and I think it'd be really helpful to kind of have you guys break that down. You guys have been in the industry for a while, seeing it ebb and flow from the beginning. And so how about we start with the kind of pre-bridge times. What was it like pushing embedded wallets, pitching to people compared to how it is today?
Yeah, that's a great question. So to your point, the market itself has gone through this like massive kind of shift over the last couple of years, right? So if you move back in time in early 2021, or somewhere along that time, 2020, 2021, 2022, the market was really around crypto natives. So you would go into Magic Eden, which is Dynamic Customer, or an OpenSea, or any one of those, and you would really face a problem, which is you would go to the site, you would want to buy something, you would want to interact with an on-chain protocol, and they would tell you, great, just go set up a wallet, save some words, 12 words, and then come back to us, and good luck. And that was not great, right? And then after you come back to us, these sites would say, oh, and by the way, you want to buy this thing, you gotta have this thing called gas. So please deposit some tokens. And how do you get the token? Figure it out, right? And so that was I have stronger words that I'm not going to use on a podcast, but that was not great as an experience. And so that's where this journey starts, right? This journey starts actually with crypto natives, which say, okay, let me abstract away that complexity. How do I do that? The first thing is let's make sure we don't send you somewhere else. So let's make the wallet embedded, right? So you show up to the site and it's there. And second, let's abstract away this concept of saving private keys, etc., and let's secure it, right? So let's put it behind email login or Google login, use technologies like MPC, where there is no private key, to actually ensure that you have an experience that's invisible, but the security that you would expect from any site out there, right? And so that was the beginning of this industry, or the beginning of kind of embedded wallets. It was very crypto native. It was very much around abstracting crypto experiences and expanding what we called at the time, expanding the crypto experiences to a billion users, right? Fast forward to 2023, 24, 25, what you started seeing is this shift where everyone said, look, I love this concept of kind of, crypto. I just want to use it to move money globally, right? And there, all of a sudden, you realize very quickly that embedded wallets serve the same role, which is, let me abstract away money movement on both sides, right? And just ensure that when I want to send money to Raj, I can do it without needing to know anything about Raj's setup, or without needing to know anything about crypto. And so the market pretty much shifted from just being crypto native to in 2023, 24, and 25 to being partially crypto native companies and partially non-crypto native companies. And today we're actually, beyond the realm of, most of our experiences and most of the conversations we had are actually with non-native crypto companies, with the fintechs, with the neobanks, etc., which is this massive shift because everyone realizes that, hey, I just want faster global rails to do stuff, right? And the way you do it is, to your point, Chuk, from before, is you need embedded wallets. And that's, we'll get to it with M&A, is you realize that embedded wallets are part of it, but you need ways to get money into embedded wallets and money out of embedded wallets. And you need to do it potentially with your own stablecoin, right? And you need to be able to move it very quickly. And there's a lot of, and you need to be able to abstract crypto concepts like gas. And so all of these are kind of tools that companies are looking at and saying, I just want to offer this bundled offering to folks, which is where a lot of this M&A comes into play. And we'll get to it, but that's kind of the history in a nutshell of our ecosystem.
Yeah, I like the way that you laid that out, where you can essentially describe the stack, right? Embedded wallets is where you hold and you can connect it to your application in a way that feels like Web 2, right? It's not a naughty word. That's good. That's the user experience that we want and that we know. So that's actually the bar, right? And then getting money in and out. Okay, that's on and off ramps. And then being able to move things very quickly. That's liquidity and connectivity to either exchanges, OTC, or other forms of liquidity. And then there's licensing. And so you're kind of building up all the various different layers, and not all players have all that at once. And so in order to build those financial experiences, you need to kind of put together the stack. And one of the ways to do that is to buy and combine.
That's right. And we didn't talk about it, by the way, at all, but like that is the consumer side of the stack. But if you're building a crypto-based operation, you need the full stack on your end as well, right? You need treasury management, and you need on-chain operations to move money within your own ecosystem, and you need tokenization and all that type of stuff. And so that's where, not surprisingly, where Fireblocks comes in, to provide that full experience. And so that is where you're seeing a lot of this M&A activities is really consolidation of a single offering, where you show up to a Fortune 50 company. They don't want to start connecting multiple vendors, right? They don't want Lego blocks. They just want to be able to buy a single solution, very similar to how any SaaS company that grows up and starts selling solutions versus products, right? So this is where we're at in the life cycle of the industry.
Yeah, and I think one thing that's interesting about this whole thing is that in the fintech world, you have a concept of a digital wallet that was, you're typically interacting with the banking as a service provider. You spin up a wallet, which would be like your checkings account or savings accounts. And what people have quickly realized when it comes to global money movement, leveraging 24/7 rails like blockchains, that you also need wallets as like the main starting point as well. And so like wallets have become like it's always been this really important piece of infrastructure that's been used for money movement. And now it's actually just much better, easier, more developer friendly. You don't need to hook into a banking as a service provider and get up and running and all these different workflows. You could work with someone like Dynamic, use the SDKs, and then get up and running right away. And I think to Itai, to your point, I mean, this is what everyone's realized across the fintech, financial institution space, is that it all starts with wallets. If we get the wallet part right and then doing it correctly, then we can interact with all these 24/7 blockchain rails. Maybe if you can share, Itai, just like, you've alluded to this briefly, but the evolution of like the customer set. You've talked about, like folks like Magic Eden that you're serving, right? Really large organization still. But like maybe describe just like who are some of the customers now and like some of the use cases that you're seeing being built on top of Dynamic. And maybe we can go through like a few use cases also.
Yeah, absolutely. So let's maybe chat about kind of first, actually, just to your previous point, which I think is important. What you're seeing today is if you move back in time and ask the world, folks at Venmo or ask folks at Block how long it took them to build, or Revolut or any one of those to build financial infrastructure for a single region, they would probably say years, right? Right now with Claude Code or choose your, for whomever uses Codex, you do you. If you open those up, you can build your own Venmo in pretty much an hour with Dynamic. Right? Like that is the power, right? You can literally build a global first Venmo in an hour with Dynamic. Obviously, don't ship it to production. You should add some security, but you can get what used to be years into hours by tapping into these global first rails, right? To the question you asked about use cases, I think there are three interesting use cases that we're seeing. There are a bunch, but I think three are really, really interesting that I think are worth doubling click on. The first one is the remittance use case, right? So in a remittance use case, and that would be, choose any global remittance company. If you look at the latest data I've seen, for instance, in the Philippines, if I recall correctly, around 10 to 14% of their GDP is actually money moving into the country via folks sending it outside, right? So someone from the US or someone from Europe is remitting money to a family member in the Philippines. I think in Nepal it's like 30% or something, crazy numbers, right? So the world, for those that don't know, kind of runs on remittance, right? And you have these massive companies that move money globally. Now, when you move money from the US to the UK, great, works really well, right? But when you're moving money from the US to Argentina, or from the US to the Philippines, or from the US to Nepal, you have a couple problems. First one is there's a lot of cost of conversion. Second one is that it takes time to move, right? So you're moving it on Swift rails. Let's say, God forbid, I want to move money on Friday. You gotta wait. You gotta wait for, you start on Friday, you're not gonna get it until Monday or Tuesday, right? Because Saturday and Sunday are pretty much closed, right? And so you have these set of challenges, which are high fees, slow movement. And then the third challenge, which is you might not want to keep your money in local currency. You might want to keep your money in dollars, right? Or dollar equivalent to protect against inflation. And so in those use cases, you are pretty much stuck today. Where embedded wallets come in, where crypto comes in, is the ability for a remittance company to essentially spin up a wallet for every one of its end users, in the Philippines, in Argentina, etc., and let them receive money instantly. Let them get that 7 days a week, so 7-day settlement window instead of 5, and let them keep that money until they use it in digital dollars, right, in USDC or USDT, where they can earn yield, right? And so the use case we're seeing there is folks spin up embedded wallets for their end consumers, for these remittance receivers, sometimes senders as well. They let them earn yield. They let them potentially issue a card right on top of it with companies like with phenomenal companies like Rain, right? And let them only convert when they need to, when there's a swipe of card, or let them issue a card in Brazil or a wallet in Brazil and off ramp to Pix as an example to their local environment. And so you get this like phenomenal kind of tool that you can embed into your existing app that gives you not just the ability to move money faster, but to start earning yield on the money, spending when you want, get it faster, settlement with less cost, all in a single bundle, which is an extremely attractive offer for folks. The second one is a little bit similar to the first one, which is the payroll use case. So if you think about remittance, it's actually, you can actually think about it in three categories. You can think about it as C2C, as in customer to customer or consumer to consumer, right? I send it to my friend, I send it to my family member, etc. You can think about it as B2C, meaning a business paying an individual. That's payroll, right? And that similar to that, right? I am providing a service, in Sweden, but I'm located in Algeria, and I want to kind of receive my money faster. I want to be able to settle it. So for that, similar concept, right? Embedded wallets, I can receive it in dollars. I can net it out in digital dollars until I have to spend it. I can potentially earn yield, do all that type of stuff. So that's a B2C use case, payroll. And then you have B2B, right? So companies paying other companies, right? I don't know what about you guys, but I prefer to get my money faster. And so, companies paying companies internationally is actually a non-trivial activity, right? You have some innovation around it, but it's a non-trivial activity. You got to move money globally. There's a lot of constraints. You get big fees on top of it, and embedded wallets can solve that on both sides, right? And so those are kind of three use cases that fall into the money movement bucket. There's a fourth. When I said three, I really lied. There's a fourth one. There's a fourth use case, which is essentially more around touching more DeFi protocols for CeFi type companies. So a completely different use case we're seeing is a bunch of exchanges, and I think Coinbase in a lot of ways led the way there. And a bunch of exchanges are implementing an embedded wallet hop in the middle between a centralized exchange and a DeFi protocol in order to create some sort of arm's length relationship between them and kind of DeFi interaction. And so what you're starting to see a lot of these centralized exchanges bring DeFi in-house and DeFi into CeFi with that embedded wallet hop in the middle, right? And it's a completely different use case of embedded wallets. There's like 20 more, but I'll pause here. Let's call it 4.
You mentioned remittance earlier, and you also mentioned people building on Claude Code and Codex. I'm a Codex user, so I'll do a quick shout out. But I think there's so much that is happening right now in terms of how easy it is to build certain applications. And embedded wallets are part of the technology stack that make it easier to build stablecoin or blockchain applications. So the front end, the back end, the stablecoin integration, the wallet, all that is coming down in terms of cost. What is still hard? So you guys have seen the implementations, both of you on the respective companies, working with the financial firms for their plan and their strategy. Where, assuming the cost of the tech comes down to zero, what are the barriers to building a remittance app to Nepal, for example?
Yeah, I think there are a couple of things that are actually still hard. I think there are 4 main things that I think are actually non-trivial to build. Okay, and I start with 4, and maybe by the end of this it'll be 5. But bear with me, everyone. We'll start with 4. The 4 things that I think are still fundamentally hard are the following. Cryptography is one of them, right? You do not want to. Maybe I'll count them out. Cryptography, security, ease of use, and compliance and regulatory, right? So if you think about the market, if for anyone who grew up as an engineer, the one rule they teach you is don't roll up your own cryptography, Like that's the one thing they teach you. Like no one, you should not write your own unless you're a cryptography expert. You should not write your own, cryptography, right? It's not something you want to get wrong, and you want to use stress tested tools, etc. Right? That doesn't change. You're not gonna, in my opinion, leverage Claude Code to rewrite cryptography anytime soon, right? It's one of those, but it's not like accounting. It's not a place where you want to innovate, right? You kind of want to have tried and true methods. The second one is security, right? Companies like Fireblocks and Dynamic within it handle security at global scale. I think 15% of all global stablecoin money movement moves through Fireblocks systems, right? You got to handle state level, attacks, right? That is, again, not a thing you necessarily want to Claude code your way. And notice I use Claude code and not Codex here, Chuk. So
thank you.
Just to make sure it's clear to anyone listening. But essentially, you don't want to necessarily Claude code your way into security, right? It's a place where you want extremely thoughtful rules around CI/CD and around supply chain attacks and around being proactive with pen tests and stuff of that sort. So that is a second thing that I don't think changes. The third is simplicity, right? At the end of the day, yes, can you spin up these some of these things on your own? You can, right? But you want to make sure it's really elegant, right? The beauty of Twilio, as an example, which I like, is they give you an API and you have access to the world communication system, right? You, in the case of Dynamic, you get an API and you have access to the world financial system, right? That is but you abstract away all the complexity around that, and it goes behind the scenes, and I think that's like a thing that's really hard to replicate. And the last thing is compliance, right? And regulatory, right? And you're seeing this with a lot of on-ramp and off-ramp companies that I think are doing phenomenally well, like BVNK and like Zero Dev and others, right? Zero Hash and others, right? These are companies that have taken their time to get licensees in different countries, that have compliance processes, that can on-ramp new countries, and that is not a thing you can, again, code your way. That's where to channel Travis from once Uber, right? With atoms, right? This is where you touch, atoms, right? You can't move a compliance system by coding your way out of it. You gotta apply and you gotta wait, and there's processes, and that's not a thing that you can easily replicate. And so those are, I stick with 4 things. Those are my 4 things.
Yeah, I mean, everything that you've called out, I mean, is I mean, I 100% agree with it. I mean, I've actually tried I'll use Claude Code because I'm a Claude Code guy, but I tried using Claude Code to actually replicate cryptography. And it usually defaults to like TypeScript or some like higher level language. It can't go down to like the Go and Rust and like those sorts of levels of implementation quite as well. And having formal verification, having security reviews around it also. So these aren't things that your engineering team might say like, hey, I can go build that now because I have all these tools at my disposal. But if you're now managing, $1 billion of flows, or in your case, Itai, like 15% of like the stablecoin volume, what you see collectively at Fireblocks-Dynamic, like you can't risk security vulnerabilities, or you can't risk like nation state actors like going after it as well. And it kind of just goes back to like what I mentioned earlier, but whether it's a digital wallet with fintech or digital wallet for crypto, these are really, really sensitive workflows. And so just I think taking shortcuts is not the way to do it. The other thing I'll call out is that when you have robust security models like what you guys have in place, it actually also just has downstream impacts to trust to the end users, the businesses that are actually using it as well. And so those are things that you have to like really just like kind of couple together to build trust with these organizations that are now maybe entering the crypto or stablecoin world for the first time also, and we got to give them the best experience possible also.
That's exactly right? Like they need to know that, just like to your point, they would implement embedded finance, right? In our 2024 lingo, I guess. They should just have trust that it works, right? I go into my banking system or my bank, and I have trust in the security tools they have in place, right? There's an inherent trust we need to get to the same level as an industry, to the point that, our industry should be boring, right? It's just the way in which money moves. But there's, I keep saying this, which is I don't think we should have crypto conferences. We're just like financial, it's just fintech, right?
Yeah, and I think that's one of the saving graces for stablecoins over the last year or so. It has its own lane. It's stablecoins. It's not crypto, for better or for worse, but mostly for the better, given the nature of the FTX in the last couple of years. The folks who are now paying attention are some of the largest financial institutions in the world. Both of you have courted some of these companies in sales processes, in general consultative processes. What can you tell us about how these large institutions are thinking? Obviously, Mastercard is clear how they're thinking about it, but maybe what about some of the other kind of PSPs and maybe other categories that folks may not be thinking about?
Yeah, I think there's, it's really interesting. Maybe I'll give an example in how they're thinking about it. Maybe an example works, which is we talked to a lot of the largest companies out there about things like creator payouts, right? And that can be physical in the world of like, driving services or hotels, etc. And that can be digital in like creator economies online. And you realize when you talk to them is that these are massive financial operations, right? Like YouTube has paid, I think, over $100 billion as an example that I saw externally, right? Like these are massive, massive financial operations, right? And they have to think about global, they have all built their own global payment networks, right? Like regardless of who it is, right? And they have built a lot of them in-house because they didn't exist. There aren't no global financial, money moving operations out there, right? You have attempts, you have kind of hacks in specific corridors, and you have companies and phenomenal startups that are trying to solve it for specific corridors, but there is no global first payment rails. And now there are, right? And that's really interesting for all these folks because it comes back to what are they solving for? They're solving for, let me pay someone faster. Let me make sure they get paid with less fees. Let me make sure they maybe keep their money in my ecosystem by offering them a wallet and by offering them a card and by letting them earn yield on whatever digital dollars they are or digital euros they aren't spending, right? And so the value prop for these is very, very clear, right? Which is just efficiency of their current processes, right? It's not necessarily that they need to really go out there and like innovate on like what would be the use case of this. The use case exists, right? The use case is there, which is companies just want, or end users or creators in this case, just want to get paid faster. They want the optionality of how they get paid, dollars, local currency, etc. They want to spend it immediately. Ideally, it streams to them versus like once a month, right? And that's a phenomenal value proposition.
I mean, just to piggyback off of that, I mean, one thing that you've mentioned is that, a lot of these organizations, they're typically building some other type of service, and then payments is like sometimes like non-core to their business. It's like they were almost forced to go build this like payments operation. And, I was talking to another large marketplace recently, and, the way they framed it to me was that payments has always been a risk management function. Like, it's like it's the way we get paid. It's the way that we pay out like our freelancers or, whoever we're serving as part of like our marketplace or our operation. And now we're like having these same folks to like reframe their thinking to like consider that to be an innovation function, but they're now like thinking about stable coins and they're thinking about these new types of primitives and new types of payment rails. And that's been a bit of a big eye opener for a lot of these organizations. If I'm like, if I'm YouTube and like I'm have all this hardware, I'm streaming video, launching new verticals, and now you're telling me to go think about this new payment thing called stable coins at the same time also, it's sometimes like it can be a tough cognitive leap. And I think once you're able to break down and simplify and like, provide infrastructure that says, hey, here's how we can streamline it for you. I think that's where the unlock typically happens. And a lot of these organizations are also forced to, they typically adopt all the different providers out there because they're not thinking about payments again as an innovation function. They're thinking about it from a risk management standpoint. So I think that's also just like a fundamental shift that I'm seeing across the board is that the fintechs are innovating. They're going to continue to do that. And we see a lot of examples like the Stripes and the World Remits and like some of these organizations of the world. But then the YouTubes of the world that are now thinking about payments differently, we have to help them, kind of walk across the chasm accordingly as well.
Right. And do you think that it's the same situation will play out where the YouTubes of the world, again, they don't want to think about payments. They just want a provider who can solve their problems. And therefore there's an opportunity therefore for the various different payment providers to come in and say, hey, I can also do this new rail, but this is not the only thing you want. You just want payments. So I've actually got to manage fiat payments, various fiat currencies cross-border, and also this new thing that's growing very rapidly. Look, what does that mean for just the way the industry is shaping? I think there'll be more M&A. It's not necessarily clear where exactly. It's clear that the opportunity for the existing payment providers is there. They've got their existing customers to serve, and they will need to add this new rail. Whether they build it themselves or whether they acquire, it's inevitable. But the way that M&A has been shaped over the last 12 months, it's not standard. We've got blockchains buying payment companies, blockchains buying wallet providers, crypto exchanges buying, buying partners. The crossover is very broad, and so we would love to hear your thoughts on, how you think the market shapes out and what to look out for.
Yeah, I will discount that I'm sometimes wrong, and so please take my prediction as unlikely, but yet I will say it, which is there is at this point we're essentially talking about the global financial industry, right? Which is enormous, right? And one thing you realize, there's no winner take all in that market, right? There's no one company, right, that does all finance, right? Because you have specializations in regions, and you have different offerings, and you have buy now, pay later, and you have PayPal, and you have all these like digital wallets, right? And so what you're gonna see is the same thing, right? It's a chaotic world, right? It's very chaotic, right? You're going to continue seeing that. You're going to see every one of these providers try to attack this problem and offer more services from its lens, right? That's why PayPal, for instance, added crypto, right? It's saying, okay, from my lens, I'll do it. But PayPal is a branded wallet, right? That's why you're going to see buy now, pay later companies try to adopt crypto, right? Because they're going to attack it from their own lens. You're going to see, again, I think obviously like there are payment companies out there that have implemented crypto, right? You might see it from the big cloud providers one day, right? There isn't going to necessarily, it's unclear to me that there's a winner take all, let me offer you a bundled thing, but rather you're going to see each of the existing providers try to, just like they do today, try to add more and more services that they can offer you. And then I'll say one more thing, which is you realize there isn't kind of a winner take all, because customer preferences or business preferences are very, very different, right? Each one has a very unique set of things. The way you buy software is very different than the way you buy hardware and the way you buy services and subscriptions and physical services. Each one needs different set of solutions. And so the reason it's chaotic, the reason the M&A market is chaotic, and everyone's approaching it from a different level, and you see Mastercard and others, right, is because there is no formula for winning this market.
Yeah, I mean, I think, and I think you've hit it on the nail. And I think one thing that I would just piggyback off of is it really comes down to like what the market needs and like what the customer preferences are, right? And like work backwards from that. And I think if you're an organization like Mastercard, you're starting to see like, hey, Genius compliance passes. You now have regulatory clarity. We happen to serve all these different banks. We know at some point they're all going to ask. They're already asking us and have been asking us for the last year or so, like, how should we be thinking about our stablecoin strategy? And then you realize that you have to unpack the hood and say, what are all the different pieces that I need? It goes into orchestration. It goes into different licenses that I may not have. And so I think when you're a large organization and you start to get this pull from like your customer base, you're kind of forced into an action. Do you buy? Do you build? Do you partner? Right? And I think another great example is folks like the Payoneers of the world, right? Where they're a large global payout partner. They work with many large marketplaces like the Airbnbs of the world. They're now starting to get this like pull from their organizations, and you could argue like they could go make an acquisition, but they're now getting their OCC charter. They're thinking about their own stablecoin issuance as well, right? And so I think everyone in the global financial space are kind of thinking of it as like less of like blockchain crypto and like, but more of like, what are my customers in the market asking for? And I don't think, as a space, kind of going back to like what Itai was talking about, the 2022, 23 eras, they weren't seeing that same market pull, but then they're now seeing it, they're seeing it today. And that's what's causing, like, I think a lot of the, the consolidation and infrastructure M&A that's happening. And, I think as the dust settles, it's going to start to create a new baseline for the industry moving forward, which is going to be really exciting as well.
Yeah. No, absolutely. The more I dig into it, and as we have more conversations and speak to more folks, call it the crosshatch of use cases in finance is almost unlimited. If you cross by market segment, by country, by channel, by type of payment, you mentioned B2B, B2C, C2B, and the others, internal versus external, just fiat crypto. If you map all those out, there's so many dimensions that the combinations are very, very unique per customer segment. And so, as you say, you can stick a range of assets together to create a bundle that serves a shape of that crosshatch, but that doesn't serve a different shape. And so therefore there's opportunities for others to come in and serve the different shapes of the market. And so this is just how finance operates. And so there's opportunities for folks to come and build. And maybe it's hard to know back in 2021 or 2020 before all of this happened, but here's where we are, and it's going to continue. So we'll have to save the Codex and Claude Code debate for another time, because I really want to get into what else is hard about building it right now with tech coming down. But this has been awesome, Itai. Always great to have you on the show.
I very much appreciate the time. Thanks for having me. And by the way, for any founder listening, there are more opportunities to build now, not less, right? There are more opportunities to start companies now in fintech, not less.
Absolutely. So Itai, where can folks go to find out more about you and Dynamic?
Yeah, absolutely. So I appreciate, again, everyone spending the time. You can go to dynamic.xyz to check us out. You can also go to fireblocks.com. We're on Twitter as well, dynamic_XYZ. You can tweet at us. Tweet at me. My last name is Turbahn. That's my Twitter handle. Come find me. I love to talk about this stuff. Obviously, if you're thinking about implementing anything crypto related, you likely need dynamic services. Coincidentally, we're around and happy to talk. So always happy to chat with folks.
That's awesome. Raj?
You can find me at Parekh on X and then mana.xyz.
And for me, it's stablecoinblueprint.com, and Chuk_XYZ on X, and Chuk Okpalugo on LinkedIn. Thank you for joining the show.
Thanks.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.